Good morning. Welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, Hormus Fatakia and Reema Tendulkar. Hey guys, good morning. What a different mood in the markets today, right? And it's always we wake up wondering what Donald Trump would tweet or post on Truth Social. And today it's been positive for the markets, and there has been a response from our Prime Minister Narendra Modi as well. So the markets of course, the trade talks are still pending. There is an expectation there could be some positive outcome, and that's exactly what the markets are factoring in today as well. A 150-point uptick on the Nifty. Midcaps are outperforming across the board. Most of the sectoral indices are doing well. Nifty Auto is lower, but it has seen that stellar rally. So has the consumption index. So these are some profit booking candidates that we are seeing today. But other than that, we do have every index doing really well. IT is building onto the gains that it saw yesterday. We have PSU Banking Index, which is up 2.1%. The small cap index is doing well as well. So 1% higher there. Of course, a lot needs to be seen of what happens next. But for now, export-facing stocks, even domestic names, doing really well.
Indeed, and markets are now higher for the sixth day in a row. But today there is a spring in the step, and the Nifty's conquered levels of 25,000 with the up move today. But as Sonal said, there is optimism in the air. There is hope that there is a bit of a trade thought. Trump has called Narendra Modi his dear friend, very good friend once again. Trade talks are set to resume. And as she pointed out, IT stocks have extended the cheer yet again. So the top gainers list includes Wipro, HCL Tech, TCS, Tech Mahindra, Infosys. If you look at the top 6 gainers, 5 of them are from the IT pack. Autos is the sole laggard today, so there is profit booking visible in Hero MotoCorp, M&M, Eicher Motors, Maruti. But other than that, actually a lot of the other sectors are doing well, whether it's defense, you've got green on the screen when it comes to the Nifty Bank. The Nifty Bank is moving in step with the frontline indices. Autos are higher in trade. You've got gains in defense names like a BEL. That's also got a gain of more than about 2%. But that's a large cap screen. Let's find out what the mid and small cap screen is telling you. Hormus has moved over to the big wall, and he's putting the spotlight on the top movers at this hour at 11.
Oh, well, shrimp and textiles, of course, the buzzwords of today's trading session. So it can start off with one such name. It's called Phase 3 Exports, and that has a very similar line of business to Wellspun Living in terms of beds, bed sheets and rugs and so on. It's the biggest single day gain on record for the stock, a 20% upper circuit here. Third straight day of gains, up 32% now in the last 3 trading sessions. Now already had 6.7 lakh shares trade hands in that 20% upper circuit now, compared to a 20-day average of 53,000. Mind you, of course, the stock does not have any institutional holding, but Ashish Kacholia has a 5.5% stake in the company at the end of the June quarter. And as a result of this move, the stock has now extended its gains for the year. It's up 25% now on a year-to-date basis. The other one is Himadri Specialty Chemicals, and today has snapped a 4-day losing streak, 5.5% higher on this stock today, and on significantly high volumes as well. More than 33 lakh shares traded already in the first couple of hours, compared to a 20-day average of just over 3 lakh shares. And with this one move, the stock is back above all of its key moving averages, be it the 50, 100 or the 200-day moving average, but is an underperformer this year, is down 17% still. But over the last 3 years, the stock has seen a 10x plus jump in terms of returns. Oracle Financial Services is the one. Of course, Reema spoke about IT, and of course this has its own reasons as well, considering the very strong results that its parent company reported. The biggest single day gain since May, now 8% higher on the stock, and the volumes already are set to cross the highest they had since the month of June. We had close to 7 lakh shares now that have already traded, compared to a 20-day average of just 31,500 shares. It's broken above its 50 and 100-day moving average today, and the next important level to watch on the upside is the 200-day moving average, which comes around levels of 90 to 70, yet down 13% from its record high levels of well over 13,000 rupees. And the last one on the list is Car Trade Technologies. It's on the downside. The stock is now down 15%. It's the biggest single day fall that the stock has seen on record. Snapped a 3-day gaining streak. 8.5 lakh shares have already been traded, compared to a 20-day average of just 1.5 lakh. And before today's trading session, the stock was up almost 75% in the last 3 months. And from the March 2023 low to the highs that the stock saw yesterday, the stock was up 8x in value, and then seeing some profit booking today after the downgrade that has come in from JM Financial. So Car Trade Tech on the downside, most of the other names too moving higher in today's session.
All right, Hormuz, thank you so much for joining us with that list. But we have a lot to track. So let's kickstart trading hour with the big story of the day. India's seafood exports is in focus after EU or European Union is slated to open its market further to boost potential for India's seafood exports. Abhimanyu is here with all the details of this story. Abhimanyu.
India had exported marine products worth $1.1 billion to the European Union in FY 23-24, and now with the imposition of US tariffs on several labor-intensive exports, the exports of marine products have also been impacted. Now, it needs to be reminded at this time that the largest export of marine products to a country or a geography was to the United States, closely followed by the European Union. Now, with the approval of the 102 new establishments as far as exports of marine products from India to the EU is concerned, the government expects a 20% jump in overall exports of marine products from India. Now, that's an immediate jump which is expected. Of course, FTA talks between India and the EU are already underway in New Delhi, and the Commerce Ministry expects that this move is going to boost bilateral trade between India and the European Union. Also, India is trying to increase its exports of labor-intensive products to several other geographies, and with this development, of course, there would be an immediate relief for Indian exporters of marine products. Several fishermen and people who are part of the cold chain stand to benefit immediately from this move. It remains to be seen which other moves are going to be undertaken by India in the coming days to cushion its labor-intensive exporters from the impact of US tariffs.
All right, that's a big story. In fact, to take the discussion further and to understand what the impact on individual stocks and the overall industry would be, Kumar Gulati, who is the chairman at CLFMA India, and Nitin Awasthi, who is a research analyst at Incred Capital, join us now. Gentlemen, good morning. Thank you so much for joining in. Well, Mr. Gulati, before I start with you, I wanted to understand stock-specific impacts. So let me go to Nitin. Then, which are the stocks which tend to benefit from here? Also, after the 50% US tariffs, do you think a lot of it will move towards European Union as a market overall?
I'll answer the second part first, and that is no. We remain the top exporters to the US. Recent data suggests that we have only gotten stronger, and we are only taking more market share in the US. So our exports in the US have not gone anywhere for it to move to EU. EU, on the other hand, has been a very big problem spot for India. For various reasons, there are a lot of trade barriers which have come, which is not only in form of tariff, which are not only commercially punitive, if I could use that word, but also in other manners, just to block these goods from entering Europe, which has made it very hectic. And many of the exporters from India have actually backed out of this market. Now that market is opening up. That is the big positive here. We are not going to move away from the US. Our share in the US remains where it is, and that's actually gotten stronger every month of this calendar year.
And which stocks tend to benefit from this move?
Immediately, there'll be the processing companies, because processing companies will be the one selling their processed shrimp to the European market. But actually, if you look at it one level down, the whole segment is going to benefit, right? If you are selling more shrimp as a country, that means you have to produce more shrimp as a country. That means everything from the hatchery to the feed, to the farm, to the farmer, to the cold storage, everything has to expand.
Nitin, so which would be the processing company? And the risk reward, which one would your preferred pick be? Just to complete this point about stocks.
I would not go to the risk reward chain as of now. I'll just stick to the priorities that I mentioned, which is processing companies, immediate benefit, ancillary companies. Ancillary companies will be the secondary benefit. Processing companies, as of today, the large processing companies in India, you have Apex Frozen, you have Avanti's subsidiary, which is Avanti Frozen Foods, and you have a company called Coastal Corporation also doing quite well. The three companies that we have looked at the past also, and that we tend to cover also on a normal basis. So these companies, we have studied them, of course, we know them, of course, and this is the way the processing business is for them. Avanti Feeds, apart from this, is the largest feed manufacturer in India.
Mr. Gulati, or to you, sir, thank you for sparing time and joining us. Does this move now open up a newer avenue for India? Of course, India is an exporter to the European Union, but does that, of course, now open up newer markets as well for shrimp exports, especially considering the uncertainties that surround the US markets, even though the exports over there have remained largely stable, if not better?
Yes, thank you for having me. Of course, having EU approve more than 100 units is going to actually benefit, especially since we've been facing the tariffs, the US tariffs. But there's also a positive that I think President Trump has announced that the negotiations will continue. So we hope that if things stand as it is when it was in April, and the 90 days moratorium was given for the exports to continue, if the negotiations are in line, so we have a growth in the market, in fact, with the EU coming. And also at the same time, India is looking at developing its domestic market. Once that happens, this shrimp sector would grow phenomenally. And this would eventually benefit the farmers, which is our main concern, the farmers of the country. So
Mr.
yes,
Gulati,
EU market will definitely will be cherry on the cake for the shrimp sector.
got it. So, Mr. Gulati, if you can give us some numbers, what has been the exports to the US so far? Has it been impacted because of that 50% tariff that kicked in from 27th of August? And how big of a market opportunity are we looking at in terms of EU markets? I know there's no specific number, but a ballpark figure if you can give us.
See, the total shrimp exports market is around more than $5 billion, which is being exported from India, and more than 40%, more than $2 billion is only to the US. The second country which is being importing a lot of shrimps from India is China and Vietnam. So China uses it for its self-consumption, and Vietnam is actually value-adding on the shrimps imported from India and re-exporting it. EU, however, being a very quality-sensitive and the food safety is extremely important for them. That is why these 100 units have been given permission, because we've been able to comply. As of now, there is no figure in terms of the shrimp export. It's very minimal. But especially with these new units being approved, we hope that the figures could reach approximately $1 billion, if not less, in the EU market alone.
And do you expect this $1 billion to happen how soon?
Well,
Mr.
this will take a period of time, because the units have just been approved. There are earlier units which have been approved. Once it's a long term in terms of the culture happens. It takes 90 days, and then we harvest, and then till the first lot goes, the products are tested, the quality assurance, the quality sensitivity. So I think it will take at least a year's time, if not more, to actually get to those figures. And that is if we fast track everything.
Nitin, so taking that point from Mr. Gulati forward into company-specific trends, now since he mentioned that if things are fast-tracked, this would take at least 12 months for it to fructify. How does that show up on the numbers of these companies? Do you see an earnings improvement in FY27, if not for this year? And if so, what does that do to the prospects of these companies? And let's stick to the ones that you mentioned, be the Avantis, the Apex Frozens and the likes.
So here, let me take Mr. Gulati's point forward. He mentioned that Vietnam is a very big market for us. But why are they importing so much from us? They're actually importing all these for pushing it to Europe. Almost all of our exports to Vietnam is pushed forward to Europe. Yes, primarily the reason was value add. But over a period of time, there has been absolute value addition has gone off the table. We do and produce high value products in India itself. We send it to Vietnam. Vietnam puts its stickers on it, and it goes to EU because our products cannot go to EU. And that is a sad part of it. So basically, all that export, if directly done, is a very, very big margin gain, right? And that is what we are looking at, like you rightly pointed out in 27.
Got that. Is it possible to just break down what is India's total manufacturing capacity? How much of that is, being exported? He spoke about $5 billion of overall exports. How much is that? I mean, are we looking at a complete shift in terms of domestic consumption versus exports? And can we get into the value-added services which can provide a margin boost? What's the big picture here now for shrimp manufacturers in India? Nitin, if you would like to go first.
Okay, so 750,000 metric tons approximately the calendar year exports that we are expecting this year. And this has been a rising trend. It had dipped for about 3 years and again started to rise. And this year, again, we are looking at that figure, 750,000 metric ton. 40% of this is directly to the US. Second largest market for us is China. Then is Japan. Then everybody else, including European Union, comes in. European Union has been importing more shrimp this year. If you look at half-year data, which is out, calendar year, I mean, from Jan to June, our exports there are up by 25%. However, the number itself is minuscule. The highest number that we've achieved is still not 10,000 metric tons a month. And this includes UK also.
Okay. All right, Nitin and Mr. Gulati, thank you so much for joining us and giving us a perspective of the overall market and individual names as well, which tend to benefit from this update that has come by. That's all about the shrimp space. We'll sip into a short break. When we come back, we'll put focus on the crypto market with Manisha Gupta. Stay tuned.
Welcome back. Midcaps are outperforming today. Indus Stars is also in focus. This is on the back of a Kotak upgrade. They have upgraded, that's Kotak Institutional Equities, has upgraded Indus Stars to a buy from a sell. So that's a double upgrade. The target price stands at 400, but many of their peers like Citi, CLSA, the target price was a lot higher. Again, they believe after the recent correction, the risk reward has turned attractive. Remember, the stock with the upmove, recent upmove has turned year-to-date positive, but it's still down about 17% from in the last 1 year and about 20% from its 52-week high. And this entire move towards Africa, expansion into Africa, they say will be gradual, measured, and unlikely to impact dividend payout. So that's the thesis, and there is an upgrade coming through. But as promised, let's turn our attention to the crypto space. Manisha is now joining in. Manisha.
Well, thank you for that. I'm talking about decentralized finance on Crypto Corner today because we are looking at strong gains coming in for this. The numbers are looking quite on the stronger side. And this is clearly an alternate when you look at the centralized finance here. So this is actually contrary to what centralized finance does. And we've seen decentralized finance really pick up quite strongly. So this is done to aim reduce reliance on centralized institutions. And this is also to promote the peer-to-peer transactions using the blockchain technology. There is also an increased demand when you look at the international markets for transparency, more accuracy, speed, efficiency, lower cost, and decentralized finance kind of fits into that requirement there. Also, it does use blockchain as a technology to create a borderless, open financial environment where no banks or middlemen are required. So we are looking at a surge of that, and in various countries is what it is picking up right now. When you look at the overall numbers as well, in 2024, the overall market was seen at around $21 billion. In 2025, the estimates are quite higher than that, at around $32.3 billion. And various reports do suggest that by the time we are in 2034, you could be looking at a $1,500 billion of a decentralized finance market there. It is on a high, and major regions that you have seen decentralized finance actually gain up has been North America. But the fastest growing market in sense of numbers continues to be Asia Pacific there. So when you look at the overall numbers there, for 2024, we've seen North America grow at around 37% in sense of contribution. And then you had Europe at number 2 with 29% of contribution. Asia Pacific, the fastest growing market right now, last year had 23% of contribution there. And then you have Latin America and then Africa, West Asia, etc., which added 3% to that as well. Well, when you look at the overall markets, it is clearly driven by the tech-savvy younger generation, the growing desire also for financial inclusion, especially in countries where banking isn't so prevalent yet. And then it also is about mobile-first financial institution. Startups also are launching user-friendly apps at this point in time to ensure that it is included in. And the DeFi platforms are aimed at retail customers at this point in time. We also are looking at high speed of developer training, community building, and crypto education, all of that being pushed as well.
Okay, all right. Thank you so much, Manisha, for getting us a sense of what's happening in the crypto market. But the other big story, of course, has to be the India-US trade talks being back on track. Let's go across to Parikshit Luthra for the latest. Parikshit, what are you picking up?
Well, both leaders, Prime Minister Modi, President Trump, have indicated a positive intention to continue trade talks. Prime Minister even went on to say that there will be an effort to conclude these talks at the earliest. Now, sources are telling us, and these are highly informed sources, they tell us that these positive statements indicate that India-US trade talks are now back on track. There will be an effort to fast-track trade negotiations in the next couple of weeks. Officials on both sides will make an effort to find common ground and a breakthrough. We still have a 50% tariff, which includes 25% additional tariff or 25% reciprocal tariff. Both need to be addressed, and India would want the tariffs to come down much lower than 15%. So that will be the focus to find a common ground. At the same time, we can expect both sides to hold early meetings in the next few weeks to resolve all kinds of trade issues related to the Russia-Ukraine war, Russian oil purchases and market access, and reach some sort of trade agreement. We're also learning from our sources that India-US officials and delegations are likely to have an exchange very soon, which means that either a US team could come to India for negotiations or an Indian team could go to the US for negotiations very soon.
Indeed, Parikshit, thank you for that very important update. By the way, there is a slight cool-off on the Nifty now, back below the mark of 25,000. Still 100 points higher, though, on the index. And most of the high flyers from earlier this week are witnessing some profit booking in today's session. Precision Camshafts is one of them, 6.5% lower there. JTE KT India is down 6, Taj GVK2 down 6. Both of them had, all three of them actually had seen some very strong moves over Monday and on Tuesday's trading session as well. Take a short break here. More on the markets on the other side. Stay tuned. We'll be right back. Welcome back. Looking to claw back towards that 25,000 mark are the bulls. So 993 is where the index currently stands, 120 points higher on the index. We'll take a look at some of the gainers as well. Of course, most of them are dominated by the shrimp names and the textile names. Indo count is now up 18%. And some of the other names like Pearl Global, Wellspun Living, all of them seeing gains of anywhere between 9 to 10%. Bajaj Electricals has made a move on the higher side now, 8.5% higher on that stock as well. That was sprung up among the list of gainers. There you can see a very sharp move in the last few minutes for Bajaj Electricals. But good time to get in the latest trends from the FNO space. Mangalam is at the FNO desk to tell us what the data is currently indicating. Mangalam.
Well, it's a good day of trade so far. You know, we have the Nifty and the Nifty Bank doing extremely well. All the engines of the frontline index are actually firing. We have the Nifty Bank and the Nifty IT index, which have been doing well. And not only that, you know, they're at important technical levels as well. The Nifty has crossed past this 50-day moving average, something that was elusive for a while, so 24,932. The Nifty Bank is just below its 20-day moving average, so 54,733 is an important mark that we need to keep an eye out on. And the Nifty IT index too, after 2 days of a rally, has crossed past its 50-day moving average at 36,215. Whether it sustains and builds on that is something that we will be tracking. Even the broader markets, your portfolio would be feeling a lot better in today's trading session. Nearly 2,000 stocks in the green for about 900 stocks in the red. So those crisscross lines, not crissing or crossing, but wide apart from each other, with the green line firmly above the red one as well. And when this happens and the FII shorts, which are close to around 91, 92% of the overall system, we see some short covering as well. Have we started to see that in the index futures? Not yet, but importantly, we're seeing signs of that in calls. So 24,850 call, the 24,800 call, and the 24,900 call, all of them are seeing some short covering. So that's a positive factor that's taking the market higher. The second factor is that put writers have gotten very active as well. So the 25,000 mark, which is psychologically important, has seen put writers be very active. So 24,900 to 24,950 is where the support has moved higher. What was earlier a resistance has now become a support. And importantly, we still haven't seen some selling from the 25,000 call writers. The 25,000 call writers have a premium of almost 150 rupees on that strike. So that tells you that the important level for the Nifty to track on the way up above 25,000 is 25,154. Why is that? Not only because the 25,000 call premium is 150 rupees, but also it is corresponding to the August 21 high post Prime Minister Modi's Independence Day speech, the rally that we saw all the way up to 25,154. So crossing that would be extremely crucial. But a lot of long positions added in a lot of these mid-cap IT names. So you have OFSS, Emphasis, Scient, all of them fairly well bid in today's trading session. And we've seen a lot of shorts being caught on the wrong side in the IT space as well. So a lot of short covering is what we are seeing on names like Tata Elxsi, Persistent Systems, and KPIT. Mid-cap IT doing a lot better than large-cap IT, which was doing well in yesterday's trading session, continues to hold on to those gains.
All right. Thank you so much, Mangalam, for giving us all those details. Let's take a short break now. Up next, we'll discuss the market fundamentals with Viraj Mehta from Enigma Investment Partners. Welcome back. You're still tuned into Trading Hour. Let's talk about some market fundamentals. Viraj Mehta from Enigma Investment Partners is joining us now to discuss his portfolio construct and some of the stocks in his portfolio as well. Viraj, good morning. Thank you so much for joining in. Some interesting names that I saw. You have around 18.5% allocation to iron and steel products, out of which you do have Surya Roshni there. I wanted to discuss that in particular. Why such a big proportion to just that one sector that you have, and specifically Surya Roshni?
First of all, thank you so much for having me on your show, Sonal. Okay, so the whole construct we thought about when we look at a portfolio construction is not only to look at the valuation, but also to look at the earnings growth and how those earnings growth is going to come, whether from volume growth or margin improvement. And if you look at this industry, last year went through a lot of trouble because the prices of steel kept on declining, and all of these companies, right from Surya Roshni to the market leader like APL Apollo, a lot of these companies had significant inventory losses last year after having 2-3 tremendous years post-COVID where they had volume growth and margin improvement on a structural basis from 3,500 to almost 5,500 or 6,500 in APL Apollo's case as well. So after a brilliant 2-3 years, they had one really somber year where they had okayish volume growth plus inventory losses, which meant that some of the valuations of these companies came down significantly, which represented a lot of value to us. And within that construct, when we kind of tried to look deeper, we came across two companies which are two of our top holdings out of top three holdings in our portfolio, which is Surya Roshni and Shankara Buildpro that we own. Specifically coming to Surya, Sonal, they are India's second largest steel pipe manufacturers, ERW steel pipe manufacturers, and they almost did like 0.9 million tons last year, and they're growing at 12 to 14%. This year, I think they will grow 15 to 18 or even 20%. And they're doing margins in the range of 5,500 rupees EBITDA per ton. Now, if you think about, and they're building up the capacity to go to 2 million tons over next 3 years. So if you put all of that into the construct and you think about this company at 1.5 to 1.75 million tons, can it do 5,500, 6,000 rupees EBITDA per ton? You are looking at almost 1,000 crores EBITDA just from the pipe division. They actually also have an electrical division where they do around 2,000 crore of sales and do 170, 180 crores of EBITDA. If you compare it to similar players in that electrical segment itself, the whole 180 to 100 crore EBITDA business of electrical gets valued at 4,000-5,000 crores in something like a CG or a Crompton, if you look at it. And then put together, this whole business of Surya Roshni was available at 5,500 crores, where you can get 200 crores of or 180 crores of lighting EBITDA and 550, 600 crores of current EBITDA of steel, which can grow to 1,000 crores, which is represented significant valuation arbitrage in our mind, in our understanding. So which is why we love Surya Roshni, and it is one of our largest holdings.
One of your largest holdings indeed. It has a somber last 12 months as well for Surya Roshni too, down 8% in the last 12 months. But Viraj, the other name that springs up and that has done very well over the last 12 months is Shankara Building Products. That is also one of your largest holdings. And with the demerger now almost falling into place, other than the business, do you see this also now as a value unlocking opportunity as well?
Oh, absolutely. So what will happen is once the demerger goes through, today you have a business which is cumulatively doing an ROE in the range of 12 to 15%. But if you were to just put a pro rata balance sheet of these two businesses, one is manufacturing and another is distribution business, you will see one business which is growing at 20-25% and will do 35-40% ROC, ROE, and also generating reasonable cash flow, will and should be valued differently from the manufacturing business, will be available even today at in the range of close to 15 times EBITDA. So, which if you were to compare that kind of business model, that kind of return ratios, that kind of growth with any other segment in the market with similar business architecture, you will see significant valuation discount even after Shankara has gone up so much. So I think market has re-rated it slightly when this demerger has come to fruition. But once it gets demerger, some of those numbers will get reported over next 12 months. You will see, in our opinion, another leg of re-rating that will happen in Shankara Build Pro even from here.
Viraj, hi, morning. The other stock, Global Spirits, that's about a 10% weightage in your small cap fund. At what price did you enter? Right now it's about 1,050. And how much more upside do you see in it? And how does it compare with competitors? So why Globus over, say, a Radico Khaitan, Tilak Nagar in the alco beverage space? Or United Spirits?
So in the United Spirits is probably an out of syllabus question for somebody like me. I don't look at.
I agree. The size is very different.
Yeah. So again, let us go back to what happened in alco beverages. Alco beverages, apart from IMIL and IFML businesses that they do, a lot of these alcohol companies also have ethanol business, which is bulk ethanol, which did significantly well apart from FY25. So they had really good years till FY22, 23, a part of 24 as well. But because of government policies and the pricing at which they were getting broken rice from FCI, all of these went into technical shutdowns for a large portion, or they were really manufacturing at a lower utilization, and which is what changed post January. If you look at the new regulation that FCI has come up with, which is when we bought. So we haven't really bought much cheaper. We bought roughly 850, 900. So not really too much change from where we bought. How we think about this business is this year can do 170, 180 crores EBITDA in the bulk business, 170 to 180 crores EBITDA in the country liquor business, and their IMFL business will break even this year. So looking at an alcohol business which can probably do like a 330 crores EBITDA, which is available at around 3,000 crore market cap, which is less than 10 times EBITDA in Alcobev, which is kind of unheard of. What will also happen is over next 2-3 years, there is a reasonable possibility that the consumer business, which is IMIL and IMFL, will grow to a scale of 1,500 to 1,800 crores revenue, and which will probably get demerged from the bulk business, which should again lead to significant re-rating for the good part of the business.
Okay, Viraj, that was a comprehensive analysis of these three names. Very helpful. Thank you so much for joining in. Looking forward to more conversations on different aspects of your portfolio building and individual names as well. Thanks a lot for joining today. With that, we'll slip into a short break. Management of Neogen Chemicals will join in next to discuss the business outlook and more. Stay tuned for that. Welcome back. Neogen Chemicals is the management on our radar right now. The three talking points that we'll be discussing with them is the outlook for their battery chemicals business, the supply chain issues, is there an impact on prices, and companies' capital expansion plans as well. Harin Kanani, the MD, Neogen Chemicals, is joining us now to discuss that and a lot more. Mr. Kanani, good morning. Thank you so much for joining in. Well, you are aware of a recent report that had come by, and they had spoken about how there could be some impact or because of oversupply that's happening in the industry on battery chemicals. First up, your thoughts on that, and what's the contribution coming in for you from the battery business currently? How will it scale in the next 2 to 3 years?
Hi. So, battery business is basically driven by two major end users. One is the EVs, the two-wheelers, the three-wheelers, four-wheelers, and we recently announced, we also saw buses being a policy, and now Ashok Leyland also announcing like they want to make even commercial vehicles using batteries, right? Electrical in a major foray into that. So this is one segment. And the second is the energy storage application, which is linked to the solar, and even discussions that even coal power plants also having some storage capacity. So when we have renewable energy, we can balance the supply significantly. I think both these are very critical, important demands, and we are seeing both of these growing continuously in India as well as worldwide. So if you look even at India, the demand constantly keeps increasing. And because of that, there's a good demand for batteries. The only challenge has been that while the demand for the batteries is increasing, the consumption of batteries is increasing, the production of the cells, which is required for these batteries, is just starting. So it was expected to start by end of 2024, which was the PLI requirement. And like giving credit to some companies like Ola who started the first gigafactory around that time, it is now stabilizing. So if we look, there are two gigafactories which are coming online in 2024-25, and there are four gigafactories which are expected to come online in 2026. So if you look at 2027, you will have 6 gigafactories which will be running, stabilizing, ramping up. And the demand is already there. So it's just a question of getting the technology right, either with their own technology investment or partners. Once that is done, by 2027-28, we are going to see a huge increase in the demand of the battery chemicals in India.
So, Mr.
Sorry, yeah.
Yes, so that is what you are seeing, a huge demand. You are talking about constraints on production. But for Neogen itself, you have also invested a lot in this particular business. Can you give us a sense of how much has it contributed in FY25 or FY26 so far? How do you think this will scale over years? And in terms of capex as well, 1,500 crores is what you announced. Only 500 crores is done so far. How will that scale up?
So if we look at, the revenues that we generated from batteries, so Neogen had the luxury that we've been working with lithium chemistry for last 40 years. And we started working on the battery chemicals also 6 or 7 years ago. So if you look 2 years ago, we were into single digit, contribution from battery. Last year, we just moved into double digit. And this year we are targeting a 3-digit kind of a battery. And let's say, depending on how it shapes up, by next financial year or the year after, we would be into 4 digits. So it's just little bit of a change, but overall, we are growing. If you say, we are almost crossing order of magnitude jumps, because that's what happens when an industry goes from 0 to 100, right? So we are part of that journey. One another thing which, sometimes we miss out is, it's when you're thinking of battery chemicals, it's not just linked only to India. The world also wants an alternate to China, and the world also wants the supply chain as badly. So, today the production of batteries outside China, be it India, be it US, be it Europe, Japan, while there are hiccups, the production is increasing, and there are clearly regulatory stages where there are some battery raw materials where there's 90-95% dependency on China with overcapacity, which is slowly getting reduced, but there was overcapacity in China. So there was a clear message that we need to have alternate sources, alternate geography as a geography de-risk. And India is the best bet outside China, which has the talent pool, which has the basic infra to handle the chemicals. So this is where we are going. As far as our capex is concerned, we are on track to complete majority of the capex in the current year. Maybe a little bit will fall over, but the entire 1,200 crores would be done in the current financial year, or maybe a little bit left over in the early half of next year. But overall, we are committed, and the capex is going the way we had more or less planned.
Mr. Kanani, if you can quantify the 3 digits, because 3 digits go from 100 to 999,
Yeah.
if you could share a number on that, that's part one. And if there are any other geographies that you are targeting for this business, if you could tell us that. And then I'll ask you about your organic growth business. And since you mentioned lithium as well, very briefly, if you could touch upon the fact that whether prices have stabilized in the second quarter as well.
Yeah, so, yes, it will be I would say it will be not closer to 999. It will be more closer to hundreds, closer to hundreds. But yeah, see, the point is, when you're starting from zero, right, it's still a significant jump. The only point I want to say was the demand is increasing, contribution is happening. In terms of the geographies question that you asked, yeah, so US is one where there are still restrictions, and even some of the battery materials was left out from the tariffs which were put on India, with the intention that they want to develop an alternate supply chain. And this is an area, so US remains one of the key areas, and the other area is Japan and Korea, where there is significant battery production happening. Technically, Europe also will have a demand, but there are already Chinese companies who have already set up plants in Europe, and there are very few policy measures to have incentive to have supply from a non-China or a geography diversification kind of a supply. So I think there we don't see very strong demand, but we see a lot of interest from Japan, Korea, as well as US markets, who basically want to have an alternate de-risking of geography.
All right, Mr. Kanani, we had a lot more questions, but there's so much happening with the tariff news and geopolitical update as well. So we'll keep that for some other time. Thank you so much for joining in and telling us your insights on the battery business overall for the company and the country as well. Time for a short break now. On the other side, we put spotlight on Salasar Techno Engineering in our segment Under the Lens.
Welcome back. Still below the mark of 25,000 is the Nifty after holding off for a brief period. The PSU banks are the ones that are continuing to move higher. Union Bank is up 4%, as is Indian Bank, as Bank of India, and of course Punjab and Sindh Bank. Of course, these low float PSU names, Punjab and Sindh, UCO Bank, Indian Overseas Bank, all of them, actually all constituents of the PSU Bank index are trading with gains currently. And so that's, of course, one pocket of the market that is doing well. Oracle Financial continues to move higher, 9% now on that stock. IGI, International Gemological Institute, 7.5% higher on that stock as well. And just pull up BSE before we call time on the show. That has seen a bit of a downturn in the last few minutes, 4% lower on that stock. There you can see a sharp slide from the highs of the day. It's almost 130 rupees, almost 100 rupees shaved off from the day's high. Now, quarter to 4% lower is BSE. We call time on this edition of Trading Hour. From Sonal, Reema and me, thank you for watching. Halftime report on the other side.